Welcome to Charts Today. My name is David Linton, and today's edition for Wednesday, the 28th of March, comes to you from London. And we start by looking at the dollar, just recovering a little bit over the last 24 hours. So we are just seeing a bit of a recovery. Price is just moving into short-term bullish mode on the price, but not yet on the lagging line on the 60-minute chart. So we are still bearish, and we do have these downside targets hanging over us, but we are seeing a little bit of an improvement in sentiment. Uh, the euro is, of course, still bullish as a result against the dollar, but it's just pulling back a little bit as the dollar strengthens. And against the Japanese yen, we're seeing the dollar has turned bullish in the short term, so that's where it tends to show up first against the yen. We do have some downside targets hanging over us still, but we have a new upside target of about 2% higher, but we've got to get through this resistance level before we can say that that's going to happen. Looking at sterling, sterling fell quite sharply yesterday, and it's put prices back into a bearish mode. We're not quite yet on the lagging line, but we are still seeing these upside targets for sterling. So it just looks like this is just a short-term setback. Against the euro, however, sterling did fall back below the 60-minute cloud, so we are more in bearish mode there, and we've still got a lot of work to do long-term to turn bullish on sterling against the euro. Against the Swissy, sterling's actually looking quite strong. Against the Aussie dollar, sterling also looking strong. So that's showing its strength across quite a few currencies. Bitcoin had a bit of a wobble yesterday. It would look like it might recover, but then it's still in this bearish mode. We've got these downside targets hanging over us for Bitcoin. 5% downside is the sort of clearest one. That's about $7,500. We're sitting at 7,900 at the moment. US stock market fell away again yesterday, so it opened quite strongly, but just fell away towards the end. So we are just seeing this pressure building in the market. S&P 500 index is below the cloud now on the daily chart, so medium term turning bearish, and the short term, of course, is still bearish with 2.5% downside potential. Nasdaq also sold off late in trading yesterday, and we are still bearish short term on the Nasdaq. We have got a downside target as much as 15%, but neither of these on these longer term charts are actually activated yet. But they are starting to hang over the market. And the Dow also fell away quite sharply towards the end of trading yesterday. Again, just turning bearish in the medium term. So it is looking more and more likely that the US stock market is going to break down. Having seen this failure to make higher highs, that is quite significant, and we're back towards the lows that we saw in February. And if we go lower, of course, that would be the confirming lower low, which would tell us that we should expect further falls in the market. And the Russell 2000, it's showing up here as well, short-term bearish. So it is across the board in the US stocks. Looking at the S&P future, it's down very slightly, so no real heads up as to which way the US market's going to open today. Looking at the Nasdaq E-mini, we are down 0.25% there, so it does look like tech stocks are going to take more of a battering today. FTSE 100 hasn't opened yet this morning, but it did recover quite strongly yesterday. But with the US sell-off last night, we can almost certainly expect that the FTSE 100 will open lower. The FTSE 250, the mid caps in the UK, doing much the same thing, so it looks like they will open lower as well. Germany's Xetra DAX also recovered yesterday, but we can expect a bit more of a sell-off when we see the markets open this morning. And the CAC 40 in Paris also just looking bearish. So really, the European markets looking far worse than US markets, and will almost certainly take their cue from the US close last night. Japan was lower, down about 1%, and is starting to look quite weak as well. Certainly turned pretty bearish in the medium term charts now. Downside targets of as much as 16-17% are activated on these charts, so it does look like Asia generally is going to fall away. Hang Seng has been the strongest of the Asian major indices, and that has held up quite well, but it has turned bearish as well. The Chinese local market was down 1%. Hang Seng was down 1.75%. So we are seeing just across the board the deterioration as a result of the US sell-off, and China's stocks starting to make new lows. So that's also quite worrying. The Indian stock market, the Sensex, did recover a bit yesterday, but is still bearish, and again has turned medium-term bearish. So all these markets really starting to look bearish after the US sell-off, and the Australian market also looking fairly bearish, making new multi-month lows. Brent crude is back below the $70 level, so we are just seeing that giving up some of the gains that it's made in the last week or so. Just starting to turn a little bit bearish here on the 60-minute chart. We do still have quite strong upside targets on the medium-term charts, and WTI Texas Light also looking to go lower, having just turned bearish on the short-term chart. We are entering territory soon where we get through the seasonality aspect, where crude will start to deteriorate in the second half of the year. US nat gas was up slightly yesterday. In fact, it had quite a good jump yesterday and sitting at $2.71. Anticipating storage numbers tomorrow, of course. But the interesting thing is that nat gas is looking quite a lot better on the short-term chart, but no clear upside target, so it does make it quite a difficult call. Just taking a look at some of the commodities. Coffee was up yesterday. So we are seeing quite a lot of commodities starting to improve, although the picture for coffee is still pretty bearish on all three time frames. And cocoa also was bearish yesterday, and we're seeing here that the charts are actually still pretty bullish for cocoa. It had an amazing run so far this year. So it's interesting that we are just flattening off now. And if we take a look at sugar, we see that sugar also just holding up quite strongly yesterday in the market, but has work to do. Cocoa is definitely the best of the softs at the moment. Gold did come back yesterday. We're sitting back at the sort of 1340 level and just looking like we might turn short-term bearish. We're just in the process of activating a downside target to $1,315, but we haven't yet quite activated that, and we are still bullish on the medium and longer term chart. So this looks like a temporary setback for gold. Key thing is we've got this 1382 target. That's the one that's going to really set us into a new breakout if gold reaches that level. Silver also just deteriorating slightly this morning. It has already activated its downside target here to about 3%, so not looking as strong as gold. US 10-year bond yields sitting at 2.79%. So we are just still in bearish mode on the bond yield short term. It is just flatlining really for the last several weeks, but still these targets to 3%, 3.05% is still the long-term target. The market does expect bond yields to go above that 3% level. But the interesting thing is we are just seeing some short-term downside pressure. Taking a look at some tech majors, we've got Apple down 2.5% overnight, so that was quite a fallback. Amazon, of course, has been the star performer of late. Actually saw quite a sell-off, down nearly 4%. So tech really deteriorated towards the close last night. Amazon still very much a bullish story on the medium and long-term charts. Google actually turning bearish in the medium term. In the short term, of course, we've still got a further 3% downside. Lots of downside targets activated here. So Google not looking anywhere near as good as Amazon. And if we take a look at Facebook, of course, loads of news flow on Facebook last week and descending to new low levels again, nudging that 150 level, closed at 152. So Facebook actually clearly bearish in the short term and medium term. And then last of all, Microsoft had a good recovery the day before and gave it all back again yesterday. There's a lot of nervousness in the market. Not testing new lows yet, but starting to look less good than it has. Still holding the medium and long-term trends for Microsoft, but for the moment, tech took a real battering yesterday, and it'll be really key to see what it does for the rest of this week. That's it for today. Until tomorrow, happy charting. See you then.